Almost live here. Hello and welcome, folks. This is Sergio Marrero here with another episode of RBL1 Live. We have David Horowitz, who's joining us tonight. He is founder and CEO of Touchdown Ventures. Thanks for joining us, David.
Thanks for having me, Sergio. Excited to be here.
Yeah, excited to have you and dive into corporate venture capital, video. What is it? Not board game making.
We can talk about that. Yeah,
and how like how you guys have really expedited corporate venture capital. So I'm excited to dive in that. For those that don't know about David, he's founder, CEO of Touchdown Ventures, graduate of the University of Michigan, has been an investor for some time, almost 8 years at Touchdown Ventures, and is an entrepreneur himself. Has recently launched Frequent Games, which we'll dive into in a little bit. But if you can share with the audience just a little bit on what is Touchdown Ventures.
Yeah, so Touchdown Ventures is kind of a pretty unique venture capital firm. So most venture capital firms, as probably a lot of your audience here knows, most of the venture capital firms actually take in capital in a single vehicle from a lot of investors. And we've actually done the opposite of that, which is we have multiple funds that we work with and manage, but each with a single investor, which is a corporation. And so the idea that we had was, well, there's so much money in venture capital. And, I always really believe that corporations should be the ultimate investor. I mean, they can actually really do something to a startup, especially if it's distribution. And so, and my background, which we could certainly talk about, is I was in corporate VC before I started Touchdown. I really saw the value of that. I was actually one of the founders of Comcast Venture Fund. And that's kind of what the genesis of starting Touchdown. As you said, we started it just over 7 years ago.
Great. And can you talk a little bit about what, like when a company comes to you, talk about T-Mobile, Kellogg, Bentley Systems, like many companies come to Touchdown. How does it work? Like how does that relationship work?
Yeah, we do a partnership with them where really we're working together with the internal employees of that particular company. Usually there's a set group of people to effectively, I would say, both build and operate the corporate venture fund. So there's a process that we go through of, making sure it's set up right way, the strategy. And then, most of the heavy lifting is really the, operating the venture fund. So that's, going out and just like any venture capital investor would do, you got to go out and find investments, diligence those investments, execute those investments, manage the portfolio, exit those investments. We typically take a lot of the lead, especially the heavy lifting. But the uniqueness of the model is, we are, effectively working with these big corporations. They are involved in the which we want them to be, because if we want to tap into those resources, we want their involvement, especially in the even in the investment process.
Awesome. And for you all walking forward, you help them, in terms of getting almost getting started. If they just haven't been, what's the ideal candidate for you guys? Like if you can walk through some of the process of, let's say they just haven't started a venture fund at all. Are they, do they need to have an established fund before coming to you? Like how does it unfold?
Yeah, we actually prefer ideally have done nothing, and this is greenfield, so we can help work with them to make sure that it's going to be set up the right way and it's going to hit best practices that, some of those that we've developed. Some of the corporates that we've worked with have done a couple of one-off investments, but more I would call ad hoc than just kind of in a more of a structured fund vehicle. We think that's good. Maybe they have seen the value of that and want to kind of formalize the process. So we like that. If the company has already started to build out a fund and now they're engaging with, there's probably something that's not working. And to some extent, I would say that that's, harder to come in and fix something. So we like to be involved early and make sure, we don't have to fix it and it's done the right way from the beginning.
That's great. And if you can share with the audience a little bit more about your background. I know you went to University of Michigan, and were you always in investing and you knew ventures, that's where you wanted to be, or how did you end up first helping Comcast get launched and then Touchdown. If you can walk us through some of
Yeah,
that
sure.
journey.
After Michigan, I actually, believe it or not, I was actually an accounting major in Michigan. So I always thought I would go into accounting, and I actually did an internship. And no offense to anybody who's in accounting. I mean, I think it's a very important profession. Certainly, the whole capital markets operate on accounting, but it just wasn't for me personally. And so I ended up going into investment banking. I was a great opportunity. That was my first job out of college, and it was a great opportunity to get more exposure to corporate finance and M&A and other key areas of interest. And it was around that time, it was the late 90s, early 2000s, when the internet boom was starting to happen. It was kind of, I think, a pretty big inflection point in venture capital in general. And I just got really excited about that. I got really excited about, as I saw a lot of companies that, at the time, that were, going public, and the fast growth. And so for some personal reasons, I was looking to relocate to Philadelphia. And so, and actually, I should say, in investment banking, I actually focused on the cable industry was actually one of the areas I focused on. So I have this background in cable. I was interested in venture capital, and I was looking to move to Philadelphia. My wife was doing graduate school at the time there. And so all the roads had led to Comcast. I was very lucky. Luck is everything in this world. Comcast was just about to start this, or had really just getting going with this corporate venture fund. And so I was one of the first people that they hired. I didn't expect I would stay there for as long as I did. I was there for almost 15 years. It was an amazing experience. I actually worked directly for one of the founders of Comcast, who's I learned a tremendous amount from, and really built a pretty good track record of kind of how to do corporate venture the right way, how to get value for Comcast, how to get value for the startups. And there was a bit of a playbook on kind of the right way of doing this that we developed. And so after 14 years, it was time for to do something different. And I kind of hit a lot of the goals and objectives that I had over that time at Comcast. And really want to do something that I would say was more entrepreneurial. And the idea of starting a new firm obviously is very entrepreneurial. Staying in corporate venture was important to me, because I really, the thing I really looked myself in the mirror was, go do something that well and know better than anybody. And I felt like, because of that experience, I knew as much, if not more, than corporate venture. I clearly had a track record. I had experience. And yes, I could have gone and probably joined another corporation and started a corporate venture fund. But the challenge of building something like Touchdown, where we could have multiple, corporations under management and really work with multiple companies, was really interesting challenge and an opportunity. And I really believe that every big company is eventually going to do this, whether they work with a firm like Touchdown, whether they build it themselves, whether they get to it 5 years from now. A lot of the thesis is just around, it goes back to innovation. You have to innovate as a big company, as Sergio, to be successful. There are only two ways to innovate. You can do that internally in the company or externally. And most big companies can't do it internally. They should try, but they can't. And at the end of the day, this idea of startups is really the best form of innovation. And what better way to get access to startups than, having a venture capital fund that can find them and source them and diligence and ultimately, invest and manage those investments. So that was, a big part of the thesis around Touchdown and how we've, executed since we started the firm.
Excellent. Yeah, it's and I want to dive into your comment on what do you mean by the right way. So for folks that may not be familiar with the corporate venture fund, having a company be your LP, and then some of the criticism that they may invest not really for returns, but strategically, it's there may be a lot of red tape, because of the larger organization having to approve how you operate, and you're not as nimble as a traditional venture fund. How, when you say doing venture fund right, what do you mean? Can you share a little bit of that?
Yeah, I mean, we feel strongly that, I think you need to have, it starts with what your objectives are, which I think you covered a little bit. And we feel strongly that a corporation should have a dual set of objectives. It should have a financial return objective, because one, I just don't know what startup would want to take money from a corporation who says, I'm not interested in the financial returns. You've now have a misalignment of interests between the corporation and the startup. So I think that has to be one of the objectives. Most of these corporations, the shareholders are not interested in doing venture capital. They've invested in the corporation because they see an operating business. And so I do think it does have to tie back into the corporation some way, shape, or form. And so I think that has to be part of that. So I think it starts with what the objectives are and making sure that it's a balanced set of objectives. And a lot of the corporations that we see don't, they'll choose one or the other. And I actually think you kind of have to choose both. And then I think it starts with the structure, some of the things that you talked about. It probably starts with obviously I'm very biased that, if you're going to do this, you should hire really experienced people, or if you're not able to do that, you should find a firm like a Touchdown or somebody else that is experienced. And that's probably the second mistake that we see, which is, hiring people that have never done venture capital before and giving them a checkbook, and that may work and it may not work. And then, the governance process, the investment approval process of sometimes you need to move a little faster in terms of venture speed. I think that's important here. And then the other thing that we see often is some of the corporations will kind of make this part of their M&A process. And again, I think that this is different. The diligence process is different. There might be a signaling issue with the startup of, am I talking to the M&A group, or am I talking to the venture capital group? So anyway, that's just a stream of conscious of some of the some of the issues. I don't know what shows up in your live stream, but if you, we actually have a pretty cool blog on corporate venture. We use Medium, so medium.com. I'll type it into the Zoom chat window, but I don't know how many people will see that. Medium.com/touchdown VC. And one of the articles that we have in that blog, which if people are interested in corporate venture, they probably should read that, is about, the mistakes that corporations made, which I was thinking through off the top of my head.
Awesome. No, I'm glad you dived in there. And when you shifted from being at Comcast, almost 15 years, leaving, starting this corporate venture fund of corporate venture funds, helping these companies accelerate. What were some of those? When you were getting started as an entrepreneur, what was, it's a different game here. So what were some of those initial aspects that you looked to do when you were first getting started with Touchdown?
Well, we had, like any company, we had to go get customers, which is the corporation. So that was where we were, fully focused on. It's probably the best advice to a startup, which is go figure out how to get customers. There's, figure out if there's demand, I guess, as part of it too, right? We were very fortunate early on. We had a couple of customers that were willing to back us, from the beginning, and became the kind of first kind of corporations that we did venture capital for. But I would say, the first couple of years of Touchdown was very difficult. We, this was a new model. I think we were still figuring out how to present it and how to articulate it. And so, I think if you think about kind of the world that we sit in, one, we work with a corporation, and then once we have that relationship with the corporation, we go look at making investments. So the investment part has never really been an issue for us. I think people like the fact that, us as a third party and expert is involved in the venture capital piece. It really was more about the building the corporate base that took a little while. But, as we started getting some, higher profile brands to and other companies to support Touchdown, it became easier and easier. And I think we just got better at explaining, who we are and what the value proposition is. And now, the one thing that's pretty amazing about Touchdown is the scale. So we have over 50 investment professionals at Touchdown right now. We have, which is started with 7 years ago. So that's, a nice growth. We work with over 15 corporations today. So it's 15 different venture capital funds that we're involved in managing. That I think we probably manage more venture capital funds than probably almost anybody, certainly at one time. And the derivative of that in terms of the size of the portfolio, number of investments. So that it's become, as we've gotten to scale, a lot of the things that we do are easier. There's obviously bigger problems with that, but that's something that's evolved over the past 7 years.
Amazing. And then from your perspective of being in the venture space 20 plus years, this is definitely an innovation on venture itself, right? Venture is even though it bets on innovation, slower to evolve. What are some of the trends that you're seeing that are changing in venture itself? If you can share some of your perspective over the last few years.
I mean, just the size of the rounds that are happening, the valuations, it definitely, there's definitely a lot more capital out there than there's ever been. I would say there's definitely some caution related to that. It doesn't mean, we're still investing and we're still very active in the markets right now, but we're seeing, some of the activities we're seeing. When I first started in venture capital, raising $10 million, believe it or not, now I look old, but I'm not that old, was a lot of money. Like, oh my God, how the hell did you get $10 million? Now, if you said I raised $10 million, you'd be like, it's maybe for a very early stage company, that would be impressive. But if it was a later stage company, it'd be like, there's probably something wrong with this company that they were in this market. So I would say that's I think the, this SPAC market has been a pretty big phenomenon. I think in general, it's been good in terms of trying to provide exits and liquidity for venture capital. The reality is that there are probably a lot of people that don't realize you're actually not really, exit until you sell your stock. And so these companies are going on the public markets, but they still have to be successful as a public company. And ultimately their stock price needs to grow to the point where you still can get you effectively just transferred private shares to public shares, but it's not an exit till you liquidate those shares. So that's been a pretty interesting phenomenon. And then I think the pandemic has been pretty fascinating just to see. Obviously the biggest change is the fact that workforce is going remote. We never, I don't think we've ever, would have ever made an investment without meeting an entrepreneur in person. And now, we've done a lot of that without, and I think we've all kind of learned to live with that. It'll be very interesting to see how that evolves in the future, whether this is kind of the, kind of the current, kind of way people continue to do business, or whether it goes back to the way it was pre-pandemic, or, what have you.
Excellent. I'm going to switch gears a little bit, and I would love you to share about your game for those that you've been an investor and now entrepreneur, starting Touchdown Ventures, and now you just started Frequent Flyer. If you can share a little bit of that with the audience, what is Frequent Flyer, and a little bit of what inspired the game.
Yeah, so I've always had this creative urge to do something in the gaming area. And so probably about 15 plus years ago, I created a prototype of this game, and it kind of sat on my shelf for a while. And as my kids got older, they started playing it, they started liking it, their friends started liking it. And when the pandemic hit, I basically said, wow, this people are not traveling as much. Obviously you'll hear that in a second, given the theme of the game. And people are playing more games, so I should really go out and pursue this. So I ended up partnering with a graphic designer and ended up publishing the game. And it's been a fun side project. It's definitely kind of a side hobby, but just got a really nice a couple of really nice kind of press and write-ups. But the game is called Frequent Flyer. Here, a copy of it. It's real. I mean, people have said, they can't believe that I, created this in my spare time. It does look very professional, if I may say so myself, but it wasn't created overnight. It was, 15 years in the making. But it's pretty fun. We're marketing as kind of a family game, but I don't think there's any reason why adults wouldn't enjoy playing it. But effectively, it mimics the idea of traveling. It's based on the United States, so traveling around the United States, earning frequent flyer miles, and kind of strategy of how you use those miles. But yeah, we got the highlight of my December was it took a little while, but we got a really nice write up from I don't know if you, Sergio, or your audience has heard of the Points Guy, but they're kind of a pretty big deal in the kind of frequent
It's like the
traveler space.
consulting, yeah, the tribe space, absolutely.
Yeah, so they're like the big gorilla brand in that area, and so they did a pretty amazing kind of review of the game, posted videos playing it, seemed to really enjoy it, and that was that was really exciting. And you've got Travel and Leisure covered it recently, and I would say it's definitely getting some nice coverage. So
I was gonna say, is the next version gonna be the miles are actually tokens, and you're gonna start, you're gonna have a metaverse version, taking digital plane flights, and what have you. What do you with? I would love your opinion, looking from the corporate venture space. I know there's a different segment on the metaverse and NFTs. It's definitely a hyped space right now, but in terms of the use cases and actual applications, like what where are you seeing it from the corporate standpoint? Where is does the market actually have legs, in your opinion?
Yeah, look, I think everybody wants to study and understand it. I'm not sure anybody's, yet quote unquote betting on it. Like people bet on the internet to build an e-commerce site, or people bet on mobile to build a mobile app. I think it's definitely more in the experimentation phase, and let's see what the I see probably slightly more interest on the NFT side right now, because I think that's probably a little bit more developed in terms of but I think there's still a lot of questions about what the long-term value of some of these assets, and is this something that's kind of a short-term fad, or is this something that people are really going to value over a very long period of time? And I don't know the answer to that. And I don't know if I've even formed an opinion on that. On the metaverse, I think it there's been a lot of different attempts at this before, and they've never been successful. Certainly, there's a lot of people that do virtual world that have been doing virtual worlds, and there are a few like a Roblox that have been successful. So I don't want to say, but there are a lot of failures along the way. Clearly, with Facebook getting behind it, that's a different animal, but whether Facebook can convert their user base to adopt it, I think is the question. And I've yet to see evidence that suggests that they will. I don't want to say that they won't, but again, it depends on what the user experience looks like. I think that if it revolves some other device, if it revolves around, I don't think the VR headset is going to work. I think you'll get a headache in about 5 seconds if you're trying to use this to explore the metaverse. If there's some other way it can be done, where the it's minimally invasive to the human eye, or to the headaches, if people are adopting, and I might actually go invest in go find a direct to consumer headache relief startup company, because I think that that's going to be a better investment than the metaverse, frankly.
I remember going to it was a VR theme park, and yeah, it was an hour in, and that's all I could take. It was really fully immersive. I think people it takes a while to adjust, for sure.
I mean, look, it's really cool. It's really fascinating. I think the experience is still subpar from the ones that I've tried. I think it's going to get better. It's going to be higher quality, but getting the mass market to adopt something of new technology is not easy. I think it has to really be worth the while. I mean, I remember, probably about 10 or 15 years ago, everybody was focused on 3D television. I went to the Consumer Electronics Show. Every company had the 3D television. The broadcasters are broadcasting content in 3D, and no consumer was interested in it. It wasn't that great of an experience. It didn't. And a year later, people dropped it. And you will not. Yeah, you might go to a 3D movie theater or get 3D glasses or whatever, or the IMAX theaters have that. But it's not. You don't hear somebody say, I'm going to go to that. I got to go to that 3D experience. And that's where I think you have to find that killer application on the metaverse that I don't know exists yet.
Excellent. And shifting back to Touchdown, if you could share a little bit of what's next for Touchdown. And I know you said they're looking for talent. So you're looking for talent. So if you could share a little bit about what talent you're looking for and what's on the horizon.
Yeah, I mean, our model is really different than we hire a lot of people, probably hire as many people, if not more than any other venture capital firm, because in a lot of ways Touchdown isn't a single venture capital firm, as you called it. It's many corporate venture capital funds under management. So yeah, we're always looking for good talent, really across different levels. But we tend to hire a lot of people that are new to venture. And one of the things that we really focused on, and Sergio, I know you've known us for a little while, and so you might have seen this. Some of the people that we have hired that we put a lot of emphasis on training and development. I think a lot of other VC firms, they don't hire as many people as we do, so that's not as important to them where it is for us. And the other thing is, to scale a firm like this, we don't want to hire people and necessarily see them leave. Obviously, there will be people that do that. We think people could build a career here like they could at any other big company or any other growing company. We want to see people develop the skills, because that's how we can scale a firm like this and take on new corporate fund mandates, by having the people that are trained up to be able to do that. So that's something that we're really focused on. We have a good track record of doing that, and we will continue. I don't, off the top of my head, know how many open positions we have right now, but generally a handful between analysts, which we consider really more entry level, though we typically don't hire people right out of undergrad. So usually 1 to kind of 2 to 3 years experience. And then we have kind of both the classic pre-MBA, post-MBA associate roles. And then we will occasionally hire more experienced people, but generally we haven't historically posted those roles as generally people that we have worked with before. We know, have some pre-existing relationship with, because we're bringing them in at a more senior level.
Awesome. Well, thanks, David, and stick around for after the stream. But for those that are online, we're gonna stop the stream now. Thank you, David, for joining us for the interview. For those that are looking to connect with Touchdown, look in the live stream and podcast notes. Their frequent flyer is in there, and then also the link to Touchdown VC. So thanks again for sharing your story today, Dave.